Welcome to the demonstration series of Bahrain VAT scenarios in SAP Business One on HANA. In the second video, we saw about the sales scenarios with respect to VAT. Now in this video, we will talk about the purchase scenarios with respect to VAT and how it is handled in Business One on HANA. We are going to look at three purchase scenarios. Which will be commonly used in your day-to-day business transactions. The first scenario is purchase of a taxable item in Bahrain from a VAT registered supplier in Bahrain. So let us open SAP Business One and see how it is handled. Now in this case, I go into the purchasing AP module, open the AP invoice, and I choose a vendor whom I have named as Bahrain supplier with VAT registration. And I choose an item, in this case which is a finished product, which is a taxable item. The moment I choose it, you can see that my tax code is automatically standard rated 5%. And I can also see that so I see that the VAT is not computed, right? So it is because I have not given a posting date. So let me add the posting date and I can see that the tax is computed automatically. Now let us go into the second scenario, which is purchase of a taxable item from a non-VAT registered supplier. So in some cases, if a supplier is not a VAT registered supplier, then he is not going to collect VAT from their customers. So in this case, let's see what happens. I'm choosing a not VAT registered supplier, but the item is a taxable item. So in this case, it will be a 0 rated tax. So the tax is also going to be 0. So where you are not liable to pay any tax to the supplier. The third scenario is a very interesting scenario, which is talking about the imports. And in this case, we have to apply the reverse charge mechanism. Now, what is reverse charge mechanism? RCM is a process where the recipient of the goods or a service is liable to pay tax on behalf of the supplier. So for example, you are importing a product from, let's say, the United States of America, and the US company would have not registered for VAT in Bahrain. So in that case, so what happens is on behalf of the supplier, you have to pay VAT to the government of Bahrain. So in this case, what happens is in the RCM process, a transaction is made and the input and the output tax gets adjusted in the same transaction. Let's see how it is handled in SAP Business One. Okay. Now for calculating the RCM, what happens is you have to create a supplier called as self-supplier. So in this case, I am paying to the government on behalf of the supplier. So I will not choose the import supplier here. In this case, I am the supplier myself. So I will choose my company itself. So which is a self-supplier. And I choose the item, which is the taxable item which I have bought from USA, the finished product. And I see now the tax code is automated to be as RCM, which is the reverse charge mechanism, VAT at 5%. Okay. Now here I can even now this unit price is only the price of the item. So here I can even add any additional cost like the customs duty or insurance or handling charges, etc. And I see, and I will tell to the system it's only a tax only invoice. Okay. Now if I look at the journal entry, let me put the posting date here. If I look at the journal entry, you will see that my journal entry is affecting my input tax and my output tax in the same journal entry. So it is basically offsetting between my input and output tax. Now with this, we come to the end of the purchase scenarios. Please talk to us for any queries that you have. Thank you so much.